Well, welcome to the next video in the Forex section of the Trading Mastery Training. In this video, we'll cover market research, and this will not be how to do fundamental research. I do, at time to time, do fundamental research in the markets that I trade, but this will be specifically about doing research on how the market operates, and I'll share with you some things that I think you should start looking at if you're not already looking at. And this is stuff that the way to look at this is that this is stuff that no one else is going to do for you. If you're looking to obviously have an edge on the market, one of the things that you need to understand is who are the participants in that market, how are they looking at things, especially the big money drivers of the market. That's who you're competing against. So to me, what you want to do on a consistent basis is look at your competition and see how do they look at the world, how do they trade the markets, what tools do they have available. So that's what we'll explore in this video. So let's jump right in. Now, when we look at the Forex market, the biggest movers or the biggest people that have the entities that have the ability to move price really starts with the large banks. Well, we'll break down some reports on this so you can see the large banks that are your counterparties in a way. You also have portfolio pooled and hedge funds. They're trading on the Forex spot market as well. And then you have corporations that are looking to hedge for various reasons. Now, all of these entities typically go through the large banks as well, but they also have different ways that they trade. Sometimes they're doing speculation, sometimes they're doing hedging. So these are the biggest players in the market. At the top, if I could have made that smaller, is the retail traders as far as moving price movements, other than maybe trying to capture liquidity, as far as these other players looking to capture liquidity that might exist. They don't have much of a ability to move price. There's just not enough retail traders in the Forex market to have an impact. It's that big. Now, if you've gone through the previous training that I mentioned in the last video, then you know some of this already. But just kind of visualize this kind of as we go forward. Another important thing that's driving the market, and this is an image from a report that I saw the other day, and this is a breakdown of the automated versus manual trading by asset class. And this has been growing for the last couple years. And you'll see equities, FX, and commodities commodities is almost at 70%, but equities and FX, those markets are over 70% automated. And there is a distinction as far as whether or not it's automated in execution or automated trading. But one of the important things to keep in mind is that when you're looking at the markets today, you think that you're up against these big banks, these big traders, but you are. But there's a layer. There's a layer that you need to start visualizing and understanding on how the markets are moving, because we're at a inflection point in technology right now. And it's been like this for a while. So the last few years, I'd say more than the last few years, algorithms have ruled Forex. And algorithms are starting to play a bigger role in all markets. This is nothing new if you've paid attention to any markets at all. I think we're at a point now where something else is going to really drastically change some of these things. And if you remember, if you have studied markets and if you're not aware of the high frequency trading and what happened there, but we're on the verge of something that I think is going to have just as big of an impact and is already having a big impact, which is artificial intelligence. It's in place right now, and it will further impact this market and other markets as well. I'm a programmer, so I have a previous history of being a programmer, but I've also followed artificial intelligence. And I'll just share a story from, I ran a software business before I got into trading, and what I visualized that software being able to do was maybe 10 years ago when I started that. It's possible right now with artificial intelligence and tools that are very inexpensive tools that I don't have to do any of the work, or I don't have to hire a team to do much of the work, because the data set and the framework is already there. So it's at that point. So if that's what's publicly available to someone to kind of just tap into, I'm in a mentorship group where pretty much one of the members is a hedge fund, and they're, I'd say 60 to 70% algorithmic trading. And that's what they focus on every single day, is just algorithmic trading, just trading the markets. And then they basically, it's just going through reports, finding where there's little edges, making a little modification. And now it's getting to the point where that algorithm, it's not even an algorithm, the artificial intelligence is doing things and making suggestions that they can't readily explain. So in some ways that could be scary. Here's what I would suggest, and how you start looking at this is that when you see things in the market, when you see how the market moves, and you study the markets and you're trading the markets, you want to understand that, and you want to look towards the future. You want to see what will impact these markets. How do I need to change my thinking? How do I need to maybe adjust some of my indicators? How do I need to change my technical analysis? That's really the point of what I'm making in this video. It's not to talk about where artificial intelligence and algorithms are going. It's more to say, here's a framework I think you should follow to do research, to understand who's your competition and what's changing in the marketplace that you're choosing to be a part of. So let's jump over and look at some reports and look at some of these numbers, and let's talk about some of that. So the first thing we can look at, and this will go back to the numbers. Now, the latest numbers for the FX survey, this is a survey done every year. You can see the various years that you can go here and look at the data. This is from Euromoney.com. They do an FX survey, and the latest results are from May of 2018, and the new results will be probably in 30 days, because I'm recording this in May of 2019. You'll see that the overall market share is JP Morgan at number 1. They were number 2 the year before. And really these top 10, they trade places. It's more like the top 7 trade places. You'll see that HSBC was 6, and then Goldman is 8. And let's see, Citi was number 1 actually in 2017. So these banks, depending on their strategy, their customers, and really how they want to structure some of their, maybe they're hedging more, maybe they're speculating more, maybe they've captured a new customer base. These numbers will fluctuate, but you'll see JP Morgan has a 12.13% market share of the FX market. Now, there's other things that you can look in here. You can look at the emerging market currencies market share. You can go through just this data. This is something, like I said, you're part of a market. You're looking to gain an edge in the market. You want to understand who are their players. Because one of the things you can do is, once you understand who the players are, you can then start going and researching the various things that they put out. So for instance, Citibank puts out their wealth management newsletter, and this is the latest one, April 29th, 2019. And it's really just an overview of some of their thinking. And what I would suggest when you read through these things is, and a lot of these reports, is you need to read between the lines of all these things. You need to really, and this isn't, what you're really looking to do is you're looking to further back up your technical analysis with an understanding of how the other participants are communicating the market. What specific words are they using? How are they framing their arguments? How are they framing their research? And so this is a good example of a report. Another thing that you'll find when you start doing research like this, and I should mention, all these things will be linked below. So everything that I mentioned in this video will be linked below, so you can go directly to them. So in the description down below, it'll be linked. So another interesting thing I come across, and I have in my calendar, this is how I do this. I have in my calendar 2 days a month where I don't call it fundamental research, but I do research like this on the markets, and you'll see the other reports that I'll share with you, where I'm really looking to understand what is the future of the market doing, what are other ways that I can look at it. So JP Morgan did something recently where they broke down the institutional investor trading behavior around three kind of big events. So Brexit, the US election, and the Swiss franc floor. And this is another interesting thing to read. Once again, you're getting an insight and a big event, how the participants really acted and behaved, where price went. And it's a good, interesting report. This is just an example, like I said, of the stuff that you can find if you just start searching for it, you start looking at it. This specific report, when I dived into this report, I went back and looked at the charts, every one of these charts, and I not only looked at, okay, what happened during that time, during these announcements, what this report was talking about, but then I went and looked at and saw, were there clues in that trading behavior to see where the market was maybe heading that I could take advantage of when I see a event like this in the future that matches this type of momentum? Is there an opportunity that I can actually trade? So I did learn a lot from this. I learned a lot from diving into this report, looking at it. Another really interesting report that I laugh because basically, if you follow the Forex market every 5 to 10 years, maybe 5 to 6 years, there seems to be some kind of fine at a major bank or traders in manipulation or doing something they shouldn't. So this report was released by a global FXC, and it's an FX global code. Basically, what this report is and I'll just read it. It's a global set of principles for good practice in the foreign exchange market. So it's the industry trying to police itself. It's a global code. Now, I'll share that the first 50 pages of this document is very dry, and most of it is, yeah, of course, this is common sense. So obviously I need to follow the laws and I need to do business in the best manner possible. That's really what this report is, the first 50 pages. It's very tedious reading. I've read it. I printed it out. I've read it. But what you'll find in reports like this, and this is something I want to highlight. Let me go to page 54, I believe it is, here in my notes. Well, if we stop here briefly, you just see a good sample of this report, which is Principle 36. Market participants should keep a timely and consistent, accurate record of their market activity, blah, blah, blah. It's just, this is the type of stuff you'll get from these type of reports. But as we scroll down to page 54, we're almost there. We will get to a section of the report that, in my mind, is gold for someone that is looking to understand the market and is looking to understand what the market participants, how they have to execute orders in the market, how they behave in the market. So this is Annex 1, and these are examples. And what this does is basically it will go through a series of transactions, and it's either going to give an X or a check mark to say that X means that you should avoid this type of behavior, and a check mark says that this is the type of conduct that this report would recommend. So you'll see here, it's just, it goes through different scenarios. And I know a lot of, I think, I shouldn't assume, but I have a feeling that the majority of people that are watching this are probably like, hey, just show me the setups. Just show me how to enter a trade and make money. That's all I care about. What I will say to that is that what I've learned in working one-on-one with traders and my own journey is that will get you to a point. But until you start to have the right attitude about trading, which is a seriousness about trading, which is taking it with utter seriousness and a focus, you're not going to realize the high capital dream that you probably have in the back of your mind. Most people start with trading with the ability, obviously, to I won't say be your own boss, but basically have your own freedom to really all the things that trading does allow you when you get good at it. Basically set your own schedule, trade off your own ability and make great wealth. But the people that get there, they hit a plateau of a certain capital level until they start looking at the market in a very serious, a very focused, and I've heard it said before, like a business. I don't use that analogy because there's not a large percentage of the people think like entrepreneurs, think like business owners. So it's not the best way, I think, to explain that. The best way is that you need to start asking yourself, are you looking at the market seriously? Are you doing the things that is going to give you a greater edge than some of the smartest people in the world on the other side trying to take money from you, trying to take your capital? So when I talk about this stuff, when I go through this stuff, I've said in my training before that my training isn't really designed to say, here's the perfect setup. A lot in this Forex training will be that. I'll share, this is the 5-try setup. This works really well. But behind that will be the analysis like this, as well as experience, but also just behind that is doing this consistently. And so it's not just something that is just out of blue sky. Hey, here's my idea on how this works, and this works all the time. Yeah, a lot of it is technical analysis, but at the end of the day, a lot of it comes from study, trading the markets, and doing the serious research to have an edge on the market. So back to this highlight. I know I just went off on a little tangent there. So let's get to two examples here. One of them is an interesting example. A bank is anticipating an order related to a potential merger and acquisition transaction on behalf of the client. And really, the bank recognizes this could have a sizable impact on the market. So they start proactively engaging with the client to talk about how to do this. How do we execute this? Because it could have an impact on price. And with this, they are looking at the ability to match their own internal flows. They want to time the execution. They're using algorithm and pre-hedging. Okay, so this is the type of stuff that, once again, if you're just sitting in wherever you're at, these are the type of transactions that have impact on the market that you're looking to trade. Another interesting one here, and I'm not going to read through this much other than just to highlight one of the key points here, is that this one here has a market participant and a client where they need a large amount of US CAD during a non-liquid period of the day. So due to liquidity conditions and the size of the anticipated order, the market participant anticipates that they're going to get a lower bid, basically. What's interesting here is what they do here is they say, but before determining a quote and an effort to improve its price to the client, the market participant tests the market liquidity by selling a small amount through the IDB. Basically, it's a market test. And you're going to see this a lot in Forex. You're going to see these type of things, which is a test for liquidity. Those are opportunities. I scalp a lot of these tests for liquidity. I don't know if it's always that. That's what I call it. But a lot of times I'll see these spikes. I'll see these tests for liquidities. And those are some of the best setups that I trade. But when you go through this, like I said, this is full of, there's probably about 40 or 50 examples in here. Once again, it's about understanding the market you're trading, understanding the counterparties on the other side, understanding what they deal with, understanding the technology, understanding the participants of the market. That's really key. So let's go to another couple interesting reports here. So here's a recent report from 2019, and this one here is price overreactions in the Forex and trading strategies. So it talks about overreactions, when do they happen, and strategies. Let's go to a section of this report just to highlight one of the key things you can learn from reading reports like this. So of course, it breaks down methodology, it breaks down the pairs, it does math stuff that I have no idea how to read. I've tried to do some of this stuff, but I realize that I just don't enjoy it, so I don't get into this stuff. Now, when they break down some of the overall results, they break down actually the timing of a overreaction. So they break it down based on pair. They basically first say, is there an overreaction? Yeah, there's an overreaction to every pair that they analyzed. And, are they statistically significant? The other thing that this report covers is, are there significant differences in returns on a day versus a usual day? And of course there is. One of the things that I found interesting from this report is not only the timing of the reaction, but is there a contrarian price movement on the day after the overreaction? And this report basically, based on how they analyzed it, said yes, across the board on all these pairs, the day after an overreaction in price, what they call an overreaction in price, there is a contrarian price movement after that. So if you just look at that, that's when I read through this report. I kind of already see this already, but when I read through this report, I said, okay, well, that's something interesting. I mean, that's a given. I've kind of already see this in the market. Now let me pull up my chart and let me pull up the Euro USD, for instance, and let me see if what they explain in this report here, if I see it, and if I can create a trade idea around that. And then can I look at it and can I visually backtest that trade idea? And I do some backtesting. I like to forward test. My forward test is I take a small amount of capital and I trade a trade idea, and it either works or it doesn't. So for me, I like to forward test new trade ideas. So something like this, I would take a small account, I would separate it into a separate account and say, this is for just this trade idea. Here's the rules for this trade idea. Here's where I discovered it. Here's how I adopted it. And then I'm going to test it in real market conditions. So that's how I like to forward test. That's how I like to test my trade ideas. So this is an example. Once again, this will be linked down below. This next report is breaking down the grid trading system robot, the GTS bot, a novel mathematical algorithm for trading the FX market. So I'm not going to go through this, but just to show you that it breaks down some of the thinking around how to build algorithms, how to build artificial intelligence, and kind of the new way to trade FX market. This next report is the long memory and data frequency in the financial markets. Look, I could go on and on here, but one of the things I want to just highlight is that these type of things, you're going to get some things that are going to be a waste of time. I'll be up front. You're going to read some things and just be like, okay, I didn't learn anything from that. But I'd say generally when I come across these reports and I spend my time doing this, I get one idea, or I get a one modification to a trade idea that I already have in place from these type of things. One thing I wanted to show is that here, this is, I often do this as well. I'll go back in time and I'll read articles from maybe 10 to 15 years ago on predictions or things like this. So this is from 2004. And this is talking about an automated FX trading system using what's called adaptive reinforcement learning, ARL. Artificial intelligence is a little bit beyond some of this, but this is from 2004. And even at 2004, this report, as you read through it, it has a very good positive equity growth with this, what's just in this report, what was just possible in 2004. So this breaks down how it would be built, the testing behind it and everything else. Once again, I think you get the point of this. I just wanted to highlight a couple things here but this is the type of stuff that you really should be diving into to really get an understanding of what you're up against and for trade ideas to make you a better trader. So I just share these reports. Like I said, I found many interesting things in here, but I don't want to just drag on the video with just various kind of tidbits of stuff. Maybe I'll do a follow-up video of how I go about researching some of these things and how I find these things quickly, and maybe how I create trade ideas off specific reports. That's if people that watch this video say, yeah, that'd be interesting. Otherwise, my main point of this video here is to really just highlight that if you're not doing this, you should be doing this. And the FX market is a good market to do this in, because there's a lot of research out there. The equity market as well. So if you trade the equities, but it's kind of the same stuff. So you're going to find the same type of studies, the same type of stuff in both markets. It's just a matter of, it's not just reading it for reading its sake. It's reading it to make yourself a better trader, a more informed trader, develop an edge, and you'll get trade ideas from this type of stuff. Because you'll start to see patterns or opportunities where, okay, that makes sense. I get that, or I see that. I see behavior like what is described in this report in the market. Okay, so since I see it, let me dive into this report a little bit more, understand kind of what it's doing, and then create a trade plan around it. Create a trade idea around it. That's key. So that's really my main point in this video. The next video will be the Forex primer, which will cover the key things that you need to have in mind when you're trading the Forex market, the most important elements that really kind of drive the market, but how to think about your trade ideas and how to think about trading the Forex market. I look forward to seeing you in that video.